Hello, I'm John Kreidler. Welcome to This Week in the Markets. On Wednesday, the Federal Reserve released the minutes of the September meeting. There's much discussion of how much should the rate cut be. At the end, they decided on half of 1%, 50 basis points, but there's much discussion that they should go slow and only go a quarter of 1%, 25 basis points. After the meeting and during public appearances, Fed officials this week talked about going slow and that 25 basis points should be the norm, and if there's any emergency needed, 50 basis points is always there. The bond market took this in stride with the 2-year and 10-year rates going back to 4%. The yield curve is still steeper with the 10-year higher in rate than the 2-year, but both rose. The stock market indexes reached all-time highs, thinking that the economy is robust, looking at the jobs report from last Friday that was quite strong, above consensus. One thing I'm looking at right now was the port strike we talked about last week and during the summer. A strike has been averted. It was only 3-4 days. However, the idea of automation replacing jobs is still out there. What remains to be seen as more and more labor unionizes, whether it's fast food, construction, industrial, whatever it might be, will there be a continued debate on automation replacing jobs, or will they strictly be looking for more pay? This all remains to be seen. I'm John Kreidler. This was This Week in the Markets. Have a great week.